Hello guys, welcome to the new Call Condor setup for the expiry week 10th of June 2021. So we are going to see the Call Condor setup for the 2021 10th June expiry, and we are going to go through the each end of the day profit and loss, what happens in the call counter. Initially we will go through the setup. Let us start.
Want to meet like minded traders and discuss option strategies, adjustments, and more? Just type in Discuss Nifty in your Telegram search box and join the friendly trader community.
So first we will see what is the setup and what are our expectations. We will see that where the which strikes we have taken and what is the maximum profit and maximum loss expected and what is the risk reward ratio. So I'll take you through each and every point here. At some point we will see the entire, once the trade is closed, so we will see the entire setup, means how it panned out during the course of the week. So the setup what we have done is we have done and bought 15,400 CE, and we paid a premium of 339.15. So this is the premium the order got executed. We will come to the order execution screenshot. You will see the same premiums there also. Okay. So then we will go and sell 15,500 CE and we will collect the premium of 253.89. So here if you see that we have done a 100-point bull call spread, what we call it as a vertical spread, means normally bull call spread and bear call spread, bull put spread and bear put spread. These spreads are called vertical spreads. Means vertical spreads means you go and buy a lower strike and then sell a higher strike, same expiry. Means this is called the vertical spread. If you are going to do this in a different expiries, like buy this expiry and sell next expiry, it is called calendar spread. Okay, that's the difference. So here what we have done is we have done a vertical spread, a bull call spread, with the expectation that the market is going to be bullish, and we have paid 339.15 as a premium to buy the 15400 CE option, and we have sold 15500 CE option and we collected 253.89 rupees as premium. This is for one lot. I have done it for 4 lots, 300 quantity. So what I'm going to explain is for 300 quantity, because the call condor strategy I have explained it with one lot. So now the actual trade I have done 4 lots, so 75 multiplied by 4 is 300 quantity. So the 300 quantity only I am going to talk today throughout. Okay. Then we went and sold 60,000 call option and we collected a premium of 18.76. So this is the first leg of the bear call spread. And to hedge that sell, we went and bought 16,100 CE for 9 rupees. So here if you see what we collected, the net credit is 9.76. We got 18.76 and then we paid out 9 rupees. So the net credit is 9.76. This is what we collected. This is very conservative. Normally we look to collect about 12 to 15 points in the bear call spread, but here we went and collected 9.76 only, because the VIX is ultra low and the premiums are very low, and if you want to collect a higher premium we may have to go close to the spot, which is very risky. So we are going to form a very conservative call condor during this week. Okay, and even the bull call spread, if you see how much is the debit is quite high on the bull call spread, because 339 is what we paid out and we collected only 253. Okay, then if you see the difference, it is much less than 20. So here also, like, we paid a lot of premium, and then we collected around 9.76 only on the bear call spread. Okay. So right now the market Nifty spot is at 15,717. For the call condor, either you go and take future, you go and take spot, it does not matter. At the end, everything will get settled in spot. Our expectation is all the options, we will leave it to expire either in the money or out of the money, like everything is cash settled. Means if the market stays between 15,500 and 16,000, this is a 500 point difference. If the market expires anywhere between this, we are not going to close this call counter, we are going to leave it to expire. So when it expires, the 16,000 and 16,100, the out of the money bear call spread will expire worthless. It both will become zero. In the end, it will show 5 paisa, but if you leave it to expire, it will expire worthless. Means it both will go to zero. So we will collect the entire credit of 9.76. Of course, the bull call spread will be in the money, and both in the money will get settled at the spot price. Means wherever the spot expires, you consider currently the spot is 15,717, and in expiry it is still 15,717. The premium for 15,400 will be how much? 15,717 minus 15,400. So it will be 317 rupees only. Here it will be 217 rupees. Whatever is the premium is showing there, it does not matter. But at the end, the settlement at the exchange level will happen against the spot. Okay, let's move on. So net paid, what we paid out for the complete call condor, the net paid is 75.5 points. Means we paid a lot of points. So the loss will be 75.5 points. Means if anywhere, if the spot expires below 15,400 and above 16,100, if it expires anywhere there, we will be losing 75.5 points. Means these call condor is a very conservative call condor. The sell strikes are 500 points away. So we will be paying a lot of points, but the pop will be much higher for this, because right now the market is at 15,717. Market going up by 400 points and going down by another 300 plus points is highly unlikely, with the VIX hovering around 15-16. Means not any big move expected in the market. So what we are going to do is we are going to take a very conservative condor, and let's see how it pans out during the week. So when the net paid is 75.5 points, the profit potential will be 100 minus 75.5. 100 is what? The 16,100 minus 16,000, or 15,500 minus 15,400. So that difference is 100 points. Means your sell leg and the hedge leg. If you see the both, the strike difference is basically what your 100 point is. So what we paid is 75.5 points. What we are trying to capture, if it expires in between, is 100 minus this. So the profit potential is 24.5 points. Means these are things I have already explained it in the strategy video very clearly. If you are still in doubt, please go and watch the strategy video. It will be very clear. Okay. So the risk reward for this trade, it is 1 is to 0.33. Means 33 means basically like we are risking 3 rupees to make 1 rupee. So this is very conservative. The risk reward is very poor. This is somewhere very close to the iron condor. Iron condor, we will get such risk reward ratio. It will be much lesser in iron condor also. For these strikes, if you go and see the iron condor, it will be less than 0.3, or it will be somewhere around 0.25 or something. So the risk reward here for a call condor, this 0.33 is a very, very conservative condor, and the risk reward is very, very poor, but the pop will be much higher. I have not seen the pop, but the moment you see the risk reward is 0.33, the pop will be very high, maybe close to like 80%. Okay, so this is a very conservative condor. I am not expecting to do any adjustments here because the VIX is low, the market is range bound. I am not expecting more than 100, 200 points move in the market for the entire 5 days of the Call Condor duration. For this whole expiry, I am expecting probably 200 points movement in the spot. Okay, either up or down. If it goes like that, we will be making a very good profit here. Okay. So the max profit in this strategy is 7,350 rupees. This has been already updated in the Call Condor Excel file, which is posted in our group also. And the maximum loss, since the risk reward is 0.33, so when the profit is 1, so the risk will be 3 times higher, so it will be 22,650. 22,650 is what max we will lose if the market goes and expires above this 16,100, at or above 16,100, or at or below 15,400. So this is what we are expecting now. This is a very conservative condor. Don't means get afraid about the huge loss potential here. The market moving like a rocket is very minimal now. So we are taking a very calculated risk in this trade. We are trying to make about 80% of 7,350. If we get 80% on the fourth day, probably we will close and come out, because the last day expiry day, the market can make some wild moves, and we don't want to lose the profit like how we lost a lot of profit in the last week Condor. Last week Condor, we were in a very good profit till the last day. The last day, the Condor, the movement has gone wrong, and then the Condor, even we closed it in profit, but we closed it in very less profit. It was ideal setup. One minor adjustment error made the Condor lose lot of money there on the profit. We never lose the capital, means we lose only on the profit in the last Condor. Okay, so here let us see, means this week I have taken a very conservative Condor, because many of the group members have also taken these strike Condors. Let us see, means I don't want them to lose money on their first trade, so very conservative setup I have given. Let's see how it pans out. Let us go through the day 1, 2, 3, 4 and the expiry day, means how the Condor pans out. Let's see. So the position initiated, means the initial, how I initiated the position, because of some technical glitch I could not record the initiated positions, but I have posted the screenshot in the group, so those screenshots I am sharing now with you. So you can see the executed orders, means this is the order executed on 4th of June, that was on Friday, and we normally take position somewhere around 11 o'clock, but since the SEBI's new margin rule, even at 10 o'clock we are getting a good OA build-up indication in the option chain, because means like there is a less participation is there, and the people who are taking positional trades, they are basically taking the positions early in the morning. The speculators have mostly, means like they are now less, they are still there, but they are less in number now because of the margin rule changes brought by SEBI. So we have taken, that is a different subject, means there is a lot of debate about it. We will not go into that. We will go and we will concentrate only on our Call Condor position. So the Call Condor, what we have done is at 10:20, and this, the complete order is executed as market order, because the spread difference was very less. It was very good. Even in the deep ITM option like 15,400, 15,500, the market is at 15,700. So I am going 300 points below 15,700, and then I am taking 15,400 and 15,500. In those strikes, I am getting less than 1 rupee spread, bid-ask spread. So too good. So what I did, I simply went and did a market order on all the strikes, and the order got executed. These are the prices which you have seen it in the previous slide on the setup. So since it is a market order, it's multiple means quantities would get executed. So the price what is given is the average price. So this is the price, the whole order price. This is the whole order price, because like 15,500 it would have executed in 50 or 253, 50, 253, 70, 253, 90, like that, means few quantities here and there. So the average price for the 300 quantity is 253.89. So this is the setup what we have done for this week. Very conservative setup. Let us see means how it panned out in the week, expiry week. So now today we have closed the day. So I am giving you the end of the day update for the first day of the Call Condor. We have taken a position at 10:20 a.m. today morning, that is 4th of June 2021, when the market was at 15,717, 15,717. So that is the time we took the positions, and we have taken 15,400, 15,500, 16,000 and 16,100. Okay, forget about the CNC order and the ICICI Bank covered call. The ICICI Bank covered call is also being updated in the group, but I will try to do a covered call strategy video in the when I roll up this one. Right now we are at June expiry, so I will roll up by around 18th or 19th. I'll roll this up to the July expiry. So that time I'll make a strategy video, means how I am selecting the premium, means how much I have acquired. Covered call is a good strategy. It is almost a risk-free strategy. The risk is always there in any strategy, option strategy. The risk is always there. There is nothing called a no-loss strategy. If somebody is telling it's a no-loss strategy, please run away as fast as you can from them, because any strategy you do, when you execute a strategy, there is always a risk of loss. Without loss, nobody can do a strategy. If there is any such strategy, everybody in the market will be doing that. Means everybody wants to make profit. So such strategy does not exist. So the covered call strategy is also a strategy where the risk potential is very, very less, because we are holding the underlying. So I'll explain the covered call strategy in the coming videos. So now let us focus only on the Call Condor one. You can see I have highlighted where our Call Condor is. So this is the end of the day position. So we took the positions where we took the position at 339.15, 253.89, 18.76 and 9. These are the 4 strikes. So the market has moved. So the premiums are updated here. This is the last traded price of the option for that day. If you see the Excel file, the values will be different because this is the LTP. So based on the average closing the next day morning, these option prices normally changes in zero. I don't know why, because the next day before the market open, I see a different LTP here, but it's a minor difference, does not matter. We will go through what is there in the LTP. So I have done my P&L calculation based on that in this slide, but if you see the Excel file, I have done it with the actual next day open prices. Okay. So right now the Call Condor profit is at 450 rupees, means we have just closed the day one. We opened it at around 10:20 and today now it is about 3:30, 4 o'clock, means the 3:30 the market closes. So I have taken the closing price of this. So right now the Nifty spot closed at 15,670.25. This is the close of the day one, which is 4th of June 2021, Friday. This is the Friday. So we took the position as 15,717. So the market has moved down 50 points, means from the level of our entry. But still, means what happened? The Call Condor has shown about 450 rupees profit, which is good. Means even the market moves down 50 points, but means we have taken somewhere here in the middle. We have got 200 points here and we have got 300 points here. The 50 points is nothing. So the Call Condor has indicated some profit. The VIX also came down, so that this strategy is a VIX neutral strategy. If VIX goes up, the buys will also increase, the sells will also increase proportionately. So we are fully hedged. So this is basically a VIX neutral strategy. wherever the VIX goes, the profit and loss might give a momentary spike, but at the end, everything will get smoothened out, because each and when the sell is increasing in value, the buy will also increase in value. So everything will get smoothened out. So right now the call condor is at 450 rupees profit. This is day one, end of the day update. Thank you. Let's see the day two. We are having a call condor which is 10th of June 2021 expiry. I am giving you the day two end of the day update of the call condor positions. Let's see. Oh, so the call condor has increased the profits a bit. Let's see. Just highlighted the call condor. The ICICI Bank, as I explained earlier, the trade is going on. We will be talking about it in a different video. Let's focus on the call condor, which is highlighted in the red box. 15,400, 15,500, 16,000 and 16,100. So the premiums have moved here and there. Let us see where our call condor profit is. Oh, the call condor profit is at 3,420. This 3,420 is somewhere at the halfway mark. You know what is our maximum profit? 7,350. That is what we are expecting to get from this call condor if the spot expires at or between 15,500 and 16,000. Let's see where the spot is. The spot is at 15,751. Yesterday it was 15,670. So the market has moved about 80 points. So when the market moves up or moves down, it does not matter. Till the time it is between 15,500 and 16,000, the call condor will continue making profits, because there is a time decay is there. In every option there is a time decay. You see the difference here. The difference here, 339 minus 253. So let's see, 339 minus 253, 339.15 minus 253.89. So we paid 85 points. So right now, how much we have captured? 364 minus 270.6, 93 points. See, minus what we had, 85.26 something, right? We have already captured 8 points here. This is what the call condor does when the market moves within the range. Even the VIX increase, decrease, does not matter. If the market moves within this range, 15,500 and 16,000, the call condor will continue making profits, and we will continue gaining in this spread, bull call spread, as well as in the bear call spread. Even the bull call spread reduces, it does not matter if the market goes down, but it is still above 15,500, it will still show the profit. So no need to worry about it. We are basically not trying to capture this or this. We are trying to capture the difference between this spread and this spread. Okay, the entry spread and the current spread. So you see, 85 points is what we paid. Right now it is at about 93 points, means we have already captured 8 points here. Here don't even ask, you can see the difference. Here we are very much already about 1,000 rupees profit, because the market is not moving, means it is still within the range. Means right now it is 15,750. We are about 250 points away from 16,000, and we have got only 8th, 9th and 10th. 3 days to go. In 3 days, Nifty to move 250 point is quite possible, but the VIX hovering around 14, 15, it is highly unlikely. Let us see means how it pans out. Right now, the call condor is set 3,420 rupees profit, which is about 40% of the overall profit, the max profit achievable in this call condor, which is 7,350. So thank you very much. Let us see tomorrow's update. Thank you. Hello guys. So we are at day 3, 8th of June. So this is a Tuesday. So we are giving end of day update for our call condor position, which we have taken on 4th of June for the 10th June expiry. So our Strikes are 15,400, 500, 16,000 and 16,100 CE. So the call condor is here. So now the market is still going nowhere. This is what I was expecting. The market is not moving anywhere and it is still well within our 15,500 and 16,000 strikes. So the call condor is doling out profits every day. Today, the profit has further increased. Yesterday, it was about 3,400. Today, it is close to 5,000 rupees. Means this is more than 50% or 60% of the maximum profit which is achievable in this call condor, which is 7,350. So nothing much to update today. Let's see where the Nifty spot is. So the Nifty spot is 15,740. Yesterday it was 15,751. Today it is 15,740. Absolutely no movement in the market today. So it is still hovering around 15,740, 50 like that. So any 100 point, 150 point movements does not matter. I am expecting to make the full profit in this call condor for this week, but we don't know. We still have 2 days to go. We don't know what will happen. But if the market goes like this week we are going to make a super duper profit in this call condor. Nothing much to update. We are in very good profit. If someone wants to close this condor now, can very well close and come, but we are right in the middle of the range. You see 15,500 and 16,000. The middle of the range is 15,750. We are almost there, 15,750. So there is no need to close now. Just wait for a couple of days. You are fully hedged. There is no need to worry. If you want to book partial profits, don't change the strikes. If you want to book some partial profits, if you have done 4 lots, maybe like book 2 lots and then keep 2 lots, or book 1 lot and keep 3 lots running, means quite possible, can do. That is one strategy, means to keep booking partial profits. Your max profit will come down because you have calculated the max profit for 4 lots. So right now you will be having only 3 lots. You have already booked some partial profit. So right now you see the spread. We paid 85 points here. So we are almost like what, 96 points. So we have just only 4 points to make here. We are still 2 days away from expiry. So this is 8th. So we are expiring on 10th. But already you see we have already got huge amount here. So no need to worry. Right now things are going good for the call condor. Let's see, means what is in the store for tomorrow and day after tomorrow. I'll update you. Thanks for being with me. Thank you very much. Bye. Hello there. We are at day 4, 9th of June, and we have just one more day to go for the expiry. We are talking about the call condor we have taken for the 10th June expiry. We have got the strikes 15,400, 500, 16,000 and 16,100. The market has moved heavily today, but still the call condor is in excellent profits. Because why? The spot is still in between 15,500 and 16,000, and with just one more day to go, we are in very good profits. This is the call condor we are talking about, and let's see. The call condor has further increased the profit to 5,790. So today, I think from yesterday to today, we have got another about 800 rupees to 900 rupees profit, because I think yesterday it was about 4,900 something. So today we have got 5,790, so 5,800 rupees. So this is the place where you can simply close the call condor and come out. We are almost at 80% of the profits in the call condor. The maximum profit in this call condor is 7,350, and we are well in our way to achieve that full profit this week. And notice, as of now, we have not even touched the call condor. Absolutely no adjustments were required, because the spot is still within our sell strikes. So till the spot breaches our sell strike, we will not touch our call condor. Whatever profit and loss is there, let it be there. It is, if it expires between 15,500 and 16,000, we are going to make 7,350 rupees. There is no doubt about that. Let's see where the Nifty spot is. See, the Nifty spot is at 15,635. So we are close to the lower range, but still 135 points above the lower range, and forget about 16,000. We are not even going to touch that tomorrow, because Nifty moving 300 points, 370 points in for tomorrow, and hitting 16,000 is highly unlikely with the VIX hovering around 14. VIX has crashed heavily, so we are hovering around 14. So we are not expecting any big movement here. Probably another 50-60 point movement, either up or down. It does not matter. We will be expiring within our sell strikes, and I think we are going to make a full profit. As of now, there is absolutely no adjustments has been done. The original call condor is still intact, and that's it for today. We are in very good profit, and tomorrow let us see, means how the market moves. Tomorrow is expiry, and let us see how the market moves, and we might decide to close the call condor and take whatever profit is available on the table. Or if the market is still just hovering around very few points, I might simply leave that for expiry. I don't even have to touch the call condor. When it expires, let it expire. Like auto score means like exchange settlement, because out of the money will be zero, means no need to worry. The in the money options will be squared off by the settled by the exchange against the spot. Let's see what happens tomorrow. Thank you very much. So today is the expiry is already done. I have recorded a video on the expiry day. The technical glitches were sorted out, so I have recorded the video on the expiry day. So I'll just update you the slide. Then the expiry day video also will come. So you can see what has happened on that day. Let's see what happened today. So today we have expired well within our sell range, and the call condor has generated 7,350 rupees of profit without even doing a single adjustment and breaking a sweat. So this is what the call condor will give if it expires, the spot expires within the sell strike. This is a very conservative call condor, as I explained earlier. Let's see. This is our call condor. This is a minor expiry trade. Forget about it. The ICICI Bank covered call also I explained earlier. That is also doing very well. If you have followed the previous slides, it is still decaying because ICICI Bank is going nowhere. So the call condor. Now you see the premiums. The premiums are 339, 238. We got just 1 point difference, means not even 1.90 paisa difference. At the expiry, what happens is the 100 strikes will have the difference in premium of almost 100. At expiry, it will be 100. Right now, you can see the call condor has generated 7,350 rupees. Full profit has been already captured. If you calculate this, it will not be full profit because this is still 5 paisa. This has become 0. So this is still 5 paisa. And the LTP is what is shown here. The settlement price will not be shown here. The settlement price will come in my statement, the daily statement, trade statement, it will come. And I already know the settlement price because I know where the Nifty spot is. So the Nifty spot is at 15,737.75. So the moment this is 15,737.75, this minus the strike will be the premium. Okay. So for 15,400, we have got 337.75. It shows 339, but the settlement will happen at 337.75. Okay. And 15,500, the settlement will be just 100 points, 237.75, because the difference is 100. So it will be 237.75. Out of the money options, 0. Because the market has expired below the 16,000 call. So this 16,000 call will expire worthless, and for this I will not pay any brokerage also. In any broker, means you can take that for a NRML order, if the option expires out of the money, the option will expire worthless. There is no need to square off this option. It will go to zero. I saved 20 plus 20, 40 rupees here. Zero is one order is 20 rupees. So here I saved 40 rupees here. Of course, the ITM options will get exchange settled. We have to pay brokerage because this is a in the money expired option. 15,500 is like well below 15,737. So this option is 237 rupees in the money. So this option will get settled, and 15,400 option will also get settled at 337. Whenever the settlement happens, we will pay brokerage and some STT. I have already uploaded the screenshot of the STT. So the STT was somewhere around what, 200 rupees. The total charges, including the brokerage for this trade also, these were about 6 trades here. So for everything together, it was about what, 350 rupees. So the people who are talking about ITM square of STT at all can simply ignore it. That means you can consider 337, 237 rupees premiums for the complete closure. If I am paying up about 300 rupees and making a profit of 7,350 rupees, the charges are nothing. Means there is no need to worry about huge STT charges or exchange charges. It's nothing. Means this is like 300 rupees is nothing when you make like 7,300 rupees. At the end, okay, 7,000. Anyway, we will pay brokerage, right? That what the 350 what I am telling is including the brokerage. Okay. So the final thing is the Call Condor has closed with the 100% profit what we were expecting on the max profit what we expected. The Call Condor has closed there. I am happy that this week we did not do any adjustment and the initial setup has worked very well for us, and I hope you have enjoyed the walkthrough of the 5 days of the Call Condor positions updates and the expiry day updates. Now you will see how the live position worked out on the day 5. I have recorded the video. You can see the video. You already know means what happened here. So I have done the video also. I have recorded the video also and explained the same thing there. You can have a look at it. Thank you very much. Bye bye.
Hello guys, welcome back. Today we are planning to close the Call Condor. Probably I'll leave the Call Condor for expiry. You can see our strikes are 15,400, 15,500, 16,000 and 16,100. Right now the market is basically hovering around 15,730 to 750, which is right in the middle of our sell strikes. So basically what I am trying to do is I am trying to leave these for expiry. I have taken few expiry trades, so this profit of some 300 400 rupees will come because of some erroneous SLM execution. Coming back to the Call Condor, so we have not done any adjustments at all to the Call Condor this week. So we have 15,400, 500 bull call spread and 16,000 and 16,100 bear call spread. So both are 1, 2, 3, 4. So total 4 lots are there. So for the 4 lots, we will be leaving it to expiry. You can see the spread has reduced to less than a point because now the time is about 3 o'clock. Don't see the time is just only half an hour to expiry, so you can see that the spreads are adjusting quite fast. So the spreads will be, the difference will be 100, means the difference between the strikes of 15,400, 500 will reflect directly in the premium. Little bit here and there it will go, but when we leave this to settlement, it will be settled at your spot minus your strike. So if you say spot is 15,750, if it expires at 15,750, it will be 15,750 minus 15,400, which will be 350. So that is going to be the premium here. If it is 15,500, So it will be 15,750 minus 15,500, it will be 250. So here it will be 350, here it will be 250. So in between the difference is 100 points. But when we entered, you can see the spread difference is quite high. So this is the premium we are going to, the difference in the premium is what we are going to collect. That is the primary aim of doing this bull call spread. And the bear call spread, you can see it's like 15 paisa. So this will expire worthless. If we don't close this, we will be saving brokerage. Here how much we collected? We collected about 7.76. So that 7.76 is going to be our full profit if we leave it to expiry. If you want to close this, you can close, but there is no need because we can save the brokerage, because 16,000 and 16,100 is quite far out of the money. So we don't even like think about closing this one, and these two strikes 15,400 and 15,500 is very much in the money. So we don't even consider about closing this. We can simply leave this to expiry because we are closing right at the middle of the two sell strikes. This is the perfect call counter closing. We will be getting a profit of 7,350, which you can see this is going to be our profit. We have not done any adjustment. The expiry trades what I have done is loaded here, and you can see how every day the profit was increasing. On the first day it was 1125, which is 15% of the maximum profit, and on the second day 7th of June we just got little more than double, so we are at 32.45% of the maximum profit of 7350. On 8th of June we just got it further doubled, so we are at about 67%, and at the last yesterday we are at 77.55%, and today when I close I'll be closing at 100%. So this is the perfect closing of the call condor without doing any adjustments. So once the trade is already done, here I will post the screenshot so you will see means how the call condor worked. You see the market is now moving up. You can see the difference is just nothing. You can see 342. This is basically the spot minus strike. The ITM will just act like a spot, means the difference will be like spot minus strike. You can see 42.50, you can see almost 42, 41, 42, means how the spot moves the same way the premium also will move. So that is how, means very close to the expiries the in the money options will act like that. So that is perfectly all right, and you see it is only like 20 paisa difference of spread will be there, because we are like 25 minutes away from expiry, and there is no hope that it will go to 15,500 or 15,400, or it will go to 16,000 or 16,100. So this is a perfect expiry for us. We will be getting good money out of it. I'll keep you posted. Thank you. Hello guys, just taking you through the final minutes of the expiry. So we already got the OTM options down to 5 paisa. This is the lowest it can get. So it has come to 5 paisa. So there is no issue. This will be closed without any problem. Means this will expire worthless. But you can see there is a mild difference of 1, 2, 3 points somewhere between the ITM call options and the spot. This is because the last half an hour of the average closing, because that is most of the this is algo traded, so they exactly know that what even the spot is moving, they will exactly know where the averages will close. So the weighted average will close, so based on that one this will move, means we are expecting somewhere around 338. That is what means. Now 340 it will keep on moving because we have got another 7 minutes to go for expiry. We are 100% sure that it will be somewhere around this range only. Like in the last 1 or 2 minutes some miracle can happen, means it can go to 15,500, but it is very unlikely. Or if it goes to 16,000, not likely, because it has already come to 5 paisa. Here there is some hedges, something is going on, or some auto square off is going on. That is why, means the price fluctuates, but can be 100% sure that these two options like 16,000 and 16,100 will close out of the money, expire out of the money, and it will expire worthless. 15,400 and 15,500 what we have is, now you can see it is a less than a point difference, means it is moving like how the spot is moving, but it is moving a little because they exactly know where the averages will take the spot to, because when it expires means what happens is the averages, now it is 41, but here if you see it is still sitting at 38, so I'm expecting around the spot to average out and then close at 738. So that is what the ITM option premiums are indicating, 738.95, 739. So that is the range we can see. But last 5-6 minutes to go, this will be moving very close to the spot. Let's see means how it goes. I'll keep you posted. Once the trade is closed, we will update the Excel file here at the end what we are getting. So stay tuned, guys. Thank you very much. Bye.
Hello guys, pre-expiry is done and dusted. So we have a call condor at 15,400, 15,500, 16,000 and 16,100. So you can see the spot expired at 15,737.75. The option premiums will get adjusted for the settlement. You can see the bear call spread of 16,000 and 16,100 has expired worthless. So the bull call spread of 15,400 and 15,500. So you can see there is a premium difference of about 1 rupee. This is means if we close this, then we will get this slippage, but we have not closed it. So now what will happen is this will get settled with the spot. So right now the spot is 15,737.75. So the option premium for 15,400 will be 337.75, and 15,500 option premium will be 237.75. So this is how it will get settled. So the difference will be exactly 100 points. Forget about the OTM. The OTM will be expiring worthless. Okay, let us update our Excel file for the same, and we will see what profit we are getting. So we have closed at 337.75. and we closed at 237.75. This is expired worthless, so you can just put like 1,001 paisa. So we have got a profit of 7,350, which is also our maximum profit. So what we received in the Call Condor for this week is 3.5%. You can consider 3.47. It is about 3.5%, and this is on the margin block of 2,12,000 rupees. This is the initial margin block. So this margin base will change dynamically, but this is the initial margin block, and this is the money means we need to keep as a minimum when we are doing the Call Condor. This can be like half of it can be collateral and half of it can be cash. So per lot it is about 50,000 rupees. So what we achieved is 3.5% in a single week. It means if your capital is very high, if you are doing like 20 lots or 30 lots like that, the profit will be a handsome money. Yeah? This is like a regular weekly income. We have the perfect closing for this week. Let us see where we closed. We closed at 15,737.75. and where is our VIX? So the India VIX is at 15, so it did not change much. So India VIX is exactly at 15, and we have not closed it, but we just left it as it is. So today is 10th of June, and we have left the position as it is. So we will just put 15.30. At 3:30 we just came out. Okay, So we have not done any adjustments. You can see it not done. So there were few expiry trades just to complement the call condor, means basically like going and selling 15200 PE, and I have sold 15900 CE also. There's a small short strangle I made. The premium should be somewhere about 1 rupee something. So I'll do about eight lots, so we'll get additional like 1000 rupees or something. Today there was some erroneous SLM execution because of some technical issue in Zerodha. I'd be raising a ticket for that, but put that aside because we will deal only with the call condor. The expiry trades are just complementing the call condor. So the only with the call condor we have received the max profit for this week of 7,350. This is without any adjustment this week, not even breaking a sweat. Just we monitored the position, maybe like daily once or twice, that's all. The market never moved anywhere close to our sell strikes. So it was just within the sell strikes. The market was a bit volatile. I could see a lot of messages in the group for last 2-3 days that SL is hitting here and there, these, that, everything. That is why I always suggest that any new trader, please do not touch Bank Nifty. Bank Nifty is a wild animal. When you start doing, the premiums are very, very attractive in Bank Nifty. That is for a reason, because the volatility is there. That is why the premiums are quite high in Bank Nifty. Even the VIX is very low, you will get very attractive premiums in Bank Nifty. But please don't touch that. If you do Nifty, you will have peace of mind and no need to worry about like getting delivery or giving delivery like stock options. The index options are always cash settled and it is every week. Stock options are only monthly. Index options are every week, and you will always have a good amount of liquidity for the next week, next month. In Nifty you will have very good amount of liquidity, but the same thing cannot be told about stock options. Probably like the top two, the like Reliance at all will have for the next month will have some liquidity, but if you go to the far month, like the third month, you will not have any liquidity on any of the stock options. But in Nifty you will definitely have good amount of liquidity, so please stick to Nifty. For the call condor, I am sticking only with Nifty. I am not touching Bank Nifty at all because it is too volatile. We will get good premiums, we will get good risk reward, but the chances of doing adjustments are very, very high in Bank Nifty because of the volatile nature of the index. So today we got a perfect closing, and let us update. We have already seen these ones, so today we will see how we are going. So this will be 337.75, 237.75, this is 0.1. So what we achieved this week is 100%. This is what we are looking for. We have achieved for this week, and this is a good week for us. We made good amount of money. We made 7,350. It might look small, but the strategy has worked this week without any flaw. So the index has expired somewhere right in the middle. You can see 15,750 right in the middle. We had a huge amount of gap in both the sides, so we don't even had to worry on any strike breaching or doing adjustments. It was a perfect trade this week. Thank you very much for being with me. May the markets be with you. Thank you. Bye.
Thank you for watching. Please post any questions you have in the comment section. Also, do not forget to like and share the video and subscribe to the channel. To find us on Twitter, Telegram and Facebook, use the username NiftyBN. Also, we post some of our trades to the community tab. So do not forget to check that from time to time.